This is Eric Muad with Muad.com. It is August the 12th, 2011. We have about just under 3 hours to go before the market close right there, and we see that the Dow is called up about 163 points. The Nasdaq is up 0.86, and the S&P 500 is up 1%. I'm looking at these charts here and wanted to show you that even though my weekend videos are usually after the close, I wanted to include my observation before the market close, and to tell you that what I see here is that I see there's a possibility that the market has already made the highs for the day. And the reason being for that is because if you take a line and on the hourly chart for the New York Stock Exchange comp, NYSE comp, you take a line and join those two highs there, we come to an area in the market right now, right there, where we've hit the highs and we seem to be backing off on the hourly RSI. What that tells me again is that this line here, which connects to this highs on the hourly chart, if you draw a straight line, you come again to an area around here where you would expect natural resistance. So it would not surprise me that with the Dow up 163 or slightly higher, it's gonna be at the highs for the day, and probably we're gonna see a market either close around current levels or lower, but I really don't see it closing higher. Now I'm gonna continue this video after the close. We'll see where the Dow is gonna settle at the end of the day, but I will not be surprised to see this market pull back towards the close. Again, this video is gonna continue. I'm gonna pause right here and continue this video after the close for the weekend analysis for what has been a crazy bear market week. This is Eric Muad with Muad.com. Be back in a couple of hours. After the close, we see that now the Dow closed up 125 points, and the Nasdaq about 15 points higher, and the S&P 500 closed up 0.53% for the day. And just another view from Yahoo Finance. This is where the market closed at, up slightly off the highs of the day, just like we had predicted a couple of hours ago. So now let's take a look at how things shaped out as far as the conclusion of the week, and going into next week, see what we can glean from this current market situation. Let's take a look at the NYSE 60-minute chart, and what we see again is what stalled the market is again this line here that connects the highs going back to July on the 60-minute chart. We hit that level earlier on today and we were unable to move above that. So my thinking is going into next week. This is the week of August the 15th. More than likely we are going to see a market that is going to be starting off the week on a low note, and probably even the rest of the week could have continued downside pressure. Now the alternative is if the market finds a way to break out above this line here. If it breaks out above that line, then we will change our thesis, and maybe we might want to be looking for long ideas. But right now we are seeing the market stall. The market is came to this line here, which has been declining top lines and finding resistance there. Usually what happens is that you'll drift lower until you find support somewhere around here, and then you try again. But as of right now, we end the week with a market that seems to have stalled with its upside thrust. Now let's continue on here. If we take a look at the Nasdaq composite, again the same scenario. If you take a look at the, we've been down all the way from about 2860 all the way to 2340 here, and it very quickly happened about 2-3 weeks. So we've rallied since this low here, but what we see now is again the same scenario. Is we are coming to the RSI, hitting resistance right there on Q, and the market made highs today and seems to be pulling back from there. Again, if you take a look at the airline index on an hourly basis, and the reason why I'm showing a few more hourly charts than usual is because the VIX is very high, and when the VIX is very high you want to look at short-term chart setups, because markets are moving faster than usual. So with the VIX closing in the 30s, I think 35, you want to be looking and considering the hourly charts more than you should when the VIX is much lower. So again, on the hourly chart for the airline index, we see that this market also, if you draw a line here, which is a blue line, this market, this blue line here, can't seem to move above that. As you can see, we've been stalling. Draw that line, you come to this area here, which corresponds to the highs for the day for the market, hence the pullback going into the close or in the last hour, because the market hit some resistance on the hourly charts. What I would not be surprised to see from here, if the market goes lower, actually might even challenge the lows the market made this week. Now take a look at the Nasdaq on a weekly basis. On a weekly basis, the Nasdaq actually almost closed positive, was only down about 1%, which is a very powerful recovery towards the end of the week, Thursday and Friday. And actually, maybe this is the beginning of a market trying to correct itself. Unfortunately for the market is when you look at the MACD, the MACDs for this market look absolutely horrible, and I don't see how this market is going to find a stable footing to the upside, because the MACDs on the weekly chart seem to be breaking down, and this has not changed. So it will not surprise me that the hourly charts predict further pressure in this market in the coming week, which is going to be the third week of August 2008. So continued pressure is what I see, unless the market can start the week on a positive note and change the charts. Until the charts change, one has to consider that this market will continue being under pressure. Alright, now let's take a look at the Dow hourly chart, and what we find here is again the same scenario. All you need to do is draw a line on the hourly chart on the Dow. Actually, it's a Dow 30-minute chart, not an hourly chart, but the Dow 30-minute chart. And again, you just draw a simple line that connects the highs in this market going back to sometime mid-July, and you find that if you draw a straight line, the market came and hit that earlier today, and then bounced off that, and it was trending lower towards the close. Now, I would change my thinking if the market would open and break out above this declining top lines, but because this breakout has yet to happen, I'm gonna default to the current trend that I see, which is lower. But should the market break out of that downward declining line, then maybe there's a potential for the market to start repairing the recent carnage. Now, on the other hand, what I see is that this market, for now, my thinking is the market goes lower, even though I haven't seen the new trading for the next week. If the charts change, we'll change our opinion. For now, I think the market is confirming on the RSI stalling, which means more than likely I'm going to default to assuming the market wants to go down, or at least over the next couple of days. Now let's take a look at another chart here. Again, this is a Dow hourly chart. As you can see, we've already broken down on the RSI. We broke down last week. This week the Dow was down about 1.5%. Impressive recovery towards the end of the week off the lows for the week, but still down week, confirming this break. So net at the end of the day, you are down for the week. So net the bear situation, bearish market has not changed. And as you can see, the MACDs again on the Dow monthly chart show there's potential for downside, fresh potential for downside, even irrespective of the last couple of days, 2 days, Thursday and Friday, where the market tried to rally. I still maintain that the downside risk is much more higher than the upside potential. Take a look at the Russell 2000, and remember, just want to remind you that whenever we have this double top here on the monthly chart, and this monthly chart for the Russell 2000 goes back to all the way 2003, so it's a long-term monthly chart. And once we had this double top here on the price, once that breakout failed, it's not surprising that this has led to a big drop in the market. S&P 500 down 13% from its highs, and still looking bearish. Now this Russell 2000 monthly chart still looks to me that it has more downside risk as opposed to upside potential, as we see the MACD wanting to cascade below zero, which tells me that there's more pressure to the downside as of right now until the charts change. That's what it looks like. Now if you take a look at the the triple Qs, the QQQ, what you see here is a nice explanation of what happened over the last 2-3 days. Number one is, you'll notice this is a 1.5 year daily chart for the QQQ. Is we broke out here sometime in beginning of December of last year. We broke out here, right there, and once we broke out there, the market stayed above this level, which is the yellow area, and bounced off this in March 2011, bounced off this level again in mid-June. But now this time what happened is we've come all the way and we broke that trend. We broke this trend here, I think Monday or Tuesday, must have been Monday. We've worked our way back, hit that line, and so we are there. If we move above this line, that's bullish for the market. If we store below this line, that's gonna be, as far as I can tell, bearish for the market. And I think we are, given the hourly chart setup, we are looking right now to stalling around here, and more than likely this market is gonna be moving lower. Now if you wanna watch the rest of this video, you'll need to log on to moather.com, take the free trial if you have to, so you can watch the rest of the video, which should be another maybe 10-15 minutes longer than this, maybe 20 minutes, I'm not sure. We'll see how the video, but I have lots of charts to share with the subscribers. Enjoy yourself. Again, if you want to continue watching this video, the reminder of it, you can do that by taking a free trial at moather.com. Now let's continue on here.